shares of Kenya's largest mobile phone firm, Safaricom, have hit an 18-month high ahead of its book closure. The company is paying a dividend of 0.22 cents per share, which represents a 10% increase year-on-year. Ken Karuri spoke to CEO Bob Collymore on the sidelines of the company's AGM held today.
Yeah, I think it closed at about 4.3 a couple of days ago, which, as you said, is an 18-month high. Look, you know, I think we tend to be a little bit reluctant to talk too much about the share price because that's determined by lots of other things. But I think essentially the fundamentals in the company continues to be good. And there's been a lot of uncertainty over the past year or so around things like the macroeconomic, around things like mobile termination rate, around things like the price war. And I think investors are now beginning to feel a little bit more comfortable and confident, both in the management team and in the externalities, if you like.
Now, just recently, Safaricom announced that it's going to invest $95 million in their own fiber optic cable to support the rising subscriber base. What does this mean for the company, as well as just shed more details on this?
The thing which is driving that are two. The first one is that 50% of our network outages is as a result of fiber cuts. And secondly, you know, there's an escalating cost for leasing, because as we start to see an explosion in data usage, you know, our cost will similarly escalate if we don't start to take more control of it.
Not surprising, Bob, that this comes at a time when the number of subscribers for the first quarter of the year grew by 16%. We are now at 29 million users across the country. What does this mean for Safaricom?
I think what we're likely to see now, because I think our data users as a percentage of our overall users has now hit about 30%. And as we've looked at other markets, that's the point where you get this kind of hockey stick. So we expect it really to start to explode now. As more and more people get access to smartphones, more and more people start to see the benefits of data and the internet, and more people get onto things like social networks. So now we believe that, you know, that's going to explode, and we need to make sure that we've got the capacity to deal with it.
Please talk to us about the growth in the data segment. You currently control about 70% of all the data users in Kenya. Are you expecting more growth in this particular area?
Yes, we are. Like I said just now, as you get to this tipping point, if you like, of about 25 to 30%, you really do start to get it. And you know, the way that materializes is, you know, you're sitting next to somebody and you know, you can see something in their handset and you think, wow, that's good, I'm going to have that. And also as we drive the price of devices down. So, you know, smartphones are getting cheaper and cheaper. And as that happens, more and more people will start to use it.
Now, the expectations that the company will post strong results for the first half of the year, and this coming at a time when the macroeconomic conditions in the country have improved. What are your projections for the company for the first half of this year?
Well, I mean, there's a few things that happened. We've had the macroeconomic, but also we've tightened our belt. And so we've managed to get costs under control. We've also got a management team that's actually much more settled, much more focused. And having delivered a pretty good second half last year, you know, everybody's got you know, the confidence is pretty well boosted. We've tried a few things. Some things have failed, some things have succeeded, but we're clearly doing more things which have succeeded. And, you know, we expect to see a good first half of this year.